In the trenches with these IPOs here, Scott. IPOs for the year up about like 1.3% for the year, underperforming the S&P, by the way. And there are some winners and losers we have to decipher. Yes. So let's go with the positive. Let's go to SodaStream. It IPO'd November 2nd of 2010. It's up almost 170%. This is a true success story. What do you think about this stock?
Well, first of all, back with IPOs. When IPOs or companies come public, they're usually the most innovative company that needs to come to market, and they could prove to be big winners if you catch the right one. Soda has been one of them.
Yeah.
But there's different types to trade it. If you're a trader the first few days, and then if you're an investor waiting for the right pattern to jump on board. So Soda, I want to show you right here. This is when Soda went public. Exciting 3-day move. Really good for all the traders. Then you had a nice tight range here where this was an entry for some investors. Quick move. Sometimes if it happens too quickly, so it's only been public for like a month. Usually you want to wait for a longer, at least 2 months. So if you waited and then entered Soda at 34 after it has some institutional interest here, look at the move you could have had. Look where it has gone to. Here was actually, you want to see today or yesterday? Boom.
You know, Scott, 55. We were actually missing the chart on that while you were talking. So can you just recap that real quick with those buy and sell points so we don't miss
Okay, well, me recap real quick usually doesn't happen. But anyway, here was your first attempt for it to break out. It was too early. And then after 2 months of accumulation by institutions, this was your entry at 34. If you got involved here strategically, all of a sudden you almost have a double, not too far thereafter. So Soda was one of those that proved to be very, very profitable for guys looking for new companies that were IPOs.
And just reported a 99% rise in unit sales, by the way, in the first quarter, which is why it had that big run this week. So for an investor, obviously now you're out of it, right? I mean, you can't buy in at this level.
Well, now hopefully you're holding it and you can continue to hold it. It had earnings. They were great. It closed on the highs. That's the type of action you want to see. That's the type of action that leads to higher prices down the road.
All right, let's go to one that is not so good. Let's go to RENN, which we highlighted a few weeks ago. It IPO'd on May 3rd. Now it had a big spike up right away and then took a nosedive and is down almost 2%. It's same kind of trade here, right? And that's what we saw. The spike was the trader.
Well, there's different, again, time frames. This was such a highly anticipated IPO, but you know what? The street didn't like it. So that's why those investors who waited are still not getting hurt. If you look at the chart here on RENN, the first day, look what it did. First day went, there was some excitement once it broke below that opening price. This was your sell signal. And now finally, after a little action, you see a small little pivot down here where this should be your first entry. I think this stock maybe gets back to 16 before we see it, but for an investor, I think you need to see about 2 months of data before we get that pivot point like we saw with Soda to even give it a chance to go higher with some type of strategy. But for now, this is kind of important with today's LinkedIn IPO because, that's the, what is that, the Facebook?
It's the Twitter.
The Twitter.
The Twitter,
okay.
yeah.
So I think LinkedIn, there are ways to trade it. Can we talk about LinkedIn and how to handle it today?
Yeah.
Because there's an art. Right now, they lifted the whole pricing up to, I think, 45.
To 45, yeah. The first range was something in the 30s to 32 to 35, and then it jumped $10, which is really rare, to 42 to 45, and now it's pricing on the high end of its range.
So what that does, it takes some of that trade for me off the table, because if it opened at 35 and went to 45, today you can make money as someone not involved. So the way you look at it is like this. Just say it's priced at 45. It opens up at 46. Okay, for 15 minutes, it's trading between 45 and 46. Once it goes above 46, that's when traders will buy it. Then maybe it goes to 48, 49, 50 and gets that 3-day move like you saw in Soda. But if it opens up at 45, 46, goes above it, and then trades below that opening price, you get away from it. That means your beginning demand is not there. You wait for another time, kind of like RENN, for a better price to get involved later. So it needs to hold that opening price on day one in order to even put it in the cards to get a day 2 or a day 3.
Right. And then for a retail investor, though, a long-term investor, don't you have to kind of wait a couple weeks until all the trades kind of shakes out? Because I remember I was talking to a portfolio manager when GM IPO'd, and she said, look, I love the story. I love the turnaround company. I think it's going to be good for the long term, but I got to stay out until all the traders get out.
So I fully agree. And just to close that, I think as an investor, you need to wait at least 2 months. Okay, for that pattern to tighten up. And if you look real quickly what she was talking about on GM, this is what you had to wait for. This was actually about a month or so. Once it broke this range, this was your entry. You had a nice move. Then hopefully you saw this pattern and ran for the hills because since then GM's done absolutely nothing.